Hey Tribe, Sean here. Welcome to the brand new series, Investing 101. And in this video, I'll be talking about 10 different order types. I decided to go and create a series of beginner's guides because I want to bring you into the stock market safely. And I realized something. If you don't understand what is market order, stop order, limit order, you are going into the stock market at a disadvantage. And I realized this recently because in our Telegram group, I've been posting my trades. And this Baba trade where I actually do a trailing stop loss gain us about 100%. And when I posted this, I realized many tribe members were asking, what is a trailing stop loss? And just a few posts before that, I was posting about this breakout strategy where I use a buy stop strategy, a buy sell strategy, and that's where we make about 1,700 over dollars. Now, a lot of tribe members also start to ask, what is a buy stop? What's a buy sell? And I realized that a lot of tribe members do not understand the fundamentals and the beginner's portion of how to invest. So, oh, by the way, if you are not in our Telegram group yet, I'll be posting the link at the description. Please join us. It is a free group where we share ideas and share real life trades with real cash. Now, back to the 10 order types. Whichever brokerage you use, when you go into a particular brokerage, whether it's IBKR, whether it's Saxo, whether it's Tasty Trade, let me just show you this. Example, this is Tasty Trade. When you want to buy or sell an option, a stock, there will be a order type. You can see limit, market, stop limit. Even in IBKR, it's the same. Example, when you want to buy this particular stock, see, there are various order types and even Saxo. Okay, so every brokerage will have different order types, or rather different choices of order types, but the order types are typically the same. So let me go through the 10 important ones that you typically find in most brokerages, and you will see how to use each of them. Extremely important. By the way, also comment below whether all these fundamental videos for beginner's guide is useful and what other questions you would like to ask. So let's go through the 10 order types. Order type number one. Order type number one is market. Now, what is the market? The description is here. It's an order to buy and sell immediately. That's a keyword. So you are not really concerned about bargaining the price. You want to buy and sell right now. It guarantees execution, but it doesn't guarantee the price. So let me show you this instead of reading through the example. Let's look at this. Example SPY is 568.02 right now. The market is closed as I did this video, but I can share with you that when you see this particular price, 568.02, it means that it's the last transacted price. Now, the stock market works like this. There's ask price and there's bid price. You can see it's jumping a little bit. Okay, but when the market is open, you'll start to move. And it's like you're going onto your carousel or eBay. It's like an auction. So there are people who wants to buy and people who wants to sell. And those who have stocks and they want to sell, they're asking for a higher price. You can see here, 567.96. Okay, 94. So you can see it is higher than the bid price. Because when you sell something, you want to sell at a higher price. And the buyers, they want to buy at a lower price. So they are bargaining. Now, when you execute a market order, example, you can see right here, order type. When I put a market order, it means and if I want to buy, it means that just give me any price. So if I'm buying, okay, 100 of a SPY shares, ETF, when I buy, very likely I'm going to get the ask price because there are sellers in the market who already key in the order saying that I want to sell you these shares at 567.89 or 87. So when I execute and I send in the order, okay, example, if I click buy now, likely I will get the ask price. Now, it's not guaranteed that I'll get ask price. I may get any price. I may even get 569, 570. Okay, it is possible because the system will match you with anyone who is selling it. So let's say there's a crazy guy out there selling at $700, they may randomly match you with the person. Okay, it's unlikely, but it may happen. I'm saying the possibility is there. So this is market price. So you can see if you want to execute it immediately, okay, you just choose market price. So here's an example. If it's trading at 50, you want it immediately, you place the market order, they will get you what available price there is out there. It may be slightly higher, slightly lower. We don't know about the price, okay? When do we use it? For immediate execution, and we are less concerned about the price. Most of the beginners, I suggest you do not use market price for buying or selling of shares if you are entering the order. Okay, let me share with you the other orders and you'll see your choices. So this is market order. Now, order number 2, limit order. Limit order, it is you can see the description, it's an order to buy or sell at a specific or better price. So for a buy limit order, it will only execute at a limit price or lower. Okay, so let's go to the example. So example, SPY. Now it's 568.02. Typically, when we want to buy a share, we want to buy it lower. So if I set a limit order, okay, look at here. If I set a limit order, like here. Now, notice the difference. Initially, when I put the market order, there isn't much choices for me to like input. I just click market order, give me whatever price you have, and I click buy, and they will execute. But when I click limit order, they will say, okay, what is the limit price that you want? Now, when we talk about limit price, you are telling people that I will not pay anything higher than the price if I'm buying. Because why? When you want to buy, you don't want to pay anything, you don't pay too high. So example, this is 568. If I put 560, okay, just for example, you can see if I put a 560 and I limit the price to 560 to buy the shares, buy 100 shares, what it means is unless I can buy 100 shares at 560, do not help me execute this trade. I only want to execute 560 and below. And if let's say you're lucky, okay, we shouldn't say lucky, but let's say based on your analysis, the price really goes down. It may go down to, let's say, 550, 540. If it goes down lower, you may get it cheaper than 560, but you will not buy anything above 560. This is called limit order. So inversely, if you actually talk about selling, if you want to short a stock, you want to sell a stock, when you sell a stock, you see, let's say I want to sell a stock. For some reason, you want to short the shares. If you don't understand why shorting a shares and you're very new to this, don't short the shares, okay? So this is 568. Okay, when you want to sell a share, you want to sell as high as possible. So you can put something like 570. Okay, 570. Now it's 568. Okay, I will only sell the shares when it hit 570 and then it goes down. Okay, got it? So it goes down is your own analysis. But basically, you will not sell the shares unless you get a price of 570. If I don't collect 570, don't sell my shares. Okay, in case you have a share, you can actually sell it at a higher price than market right now. Okay, so you're saying minimally, I'm going to get 570. Otherwise, I'm not going to sell my shares. Now, if this is not very intuitive to you, go back to buy. Think about buying first. Buying, you always want to bargain at a lower price. So when you put a limit, you will never pay a price higher than the limit price that you set. This is what you set on it. Okay, so this is the whole idea of limit price. So example, typically now it's 568 and you want to get it at 567 cheaper, you'll put a limit price 567 and the system will run for you the whole entire day. And if they manage to match you with someone 567, they will actually execute the order. Otherwise, it will not happen. So you can see, example, you want to buy a stock at 50, the stock is now at 50, you want to buy it when it's 48, you can put a limit price. It will never buy above 48. Okay, so this is bargaining. You're telling your broker, buy for me when it hits 48. Okay, it will never execute higher than 48. Now, this is when you use it to bargain for a lower price. And this is very typical. So for beginners, remember, this is the one that I would suggest you use, a limit price. But you shouldn't put like, let's say, for example, now it's 568. You go and put a $300. That's not realistic, right? But who knows? Who knows? Okay, you can put 300. And remember, okay, we'll talk about the rest in a moment's time. Well, maybe one day it hits 300, you'll get it. Okay, got it? So this is limit order. The next one I want to talk about is mid price. So what is mid price? Read here. A mid price orders execute at the mid price between current bid and ask. Okay, this is pretty interesting. And not many other brokerages have this, but IBKR has this. Now, again here, if you want to buy SPY, you can see that they are bargaining right now. 567.91, 567.83. So it's like 83 cents and 91 cents, about 10 cents difference. And you say, I want to get the best price quickly. Okay, so instead of putting market price where you get it immediately, okay, IBKR has a function called mid price. Okay, you can see mid price. Oops. So you can see mid price, but they will also ask you to put a price cap. Price cap means, okay, I'm not going to pay anything above that price. So for example, you put 570. I'm not going to pay anything higher than 570. And I want the mid price. So they will help you try to execute it as fast as possible between the bid and ask price. Likely, you're going to get 567 point maybe 90. Okay, somewhere around the middle. That's what we call the mid price. So this is how it goes. Okay, so you can see that if the bid is 49, the ask is 51, the mid order will aim to execute at 50. Because why do we say aim and not guaranteed? Because the price is constantly moving. So you can see right now, even when the market close is moving, okay, there's a post-market, pre-market activity, but it's not going to change. But you see, this is how it goes. So you aim to get a fast execution, but it's better than market price. So you see, with this particular input of a mid price, there's very little reason to use a market price. But again, not every brokerage have a mid price function. So this is unique to IBKR. Let me know in the comments below if any other brokerages have a mid price function as well. So these are 3 order types. Again, for beginners, focus on limit price. Okay, use limit when you enter a particular trade. Now, let's go through the next few order types. The next one is a stop sell. This description, you can see, is an order that becomes a market order once a specific price is reached. What are you talking about? Now, it's very simple. And this one, typically, you use it when you already have the stock. So, for example, I already have this stock. Example, I bought SPY, say, well, in fact, I really do have this stock. So disclaimer, this is not a recommendation to buy or sell, just sharing information. Example, let's say I managed to buy this stock at 400 and let's say 425. So after I buy the stock, it went up, and well, pretty good profits, right? 400 plus, now it's 500 plus. However, I'm also concerned maybe election is coming. Maybe I heard that recession is coming. I'm worried and I see that, well, I want to actually put a stop. Stop meaning to say if it drops, I want to sell this off. Okay, I want to sell this off. So now you can see that SPY, see, I do have some positions here. So if it drops and you're actually contemplating, well, now it's 567. If it drops below 560, I want to sell the stocks. Okay, because maybe it's going to go downtrend. So this is what a lot of people call a stop loss. So this is a stop order. So when you enter a stop order, how do you do that? You come to this particular again order ticket, and depends, your brokerage may look a bit different. And the order type, you choose stop. When you choose stop, you can choose the number of shares again, and then you put what is the stop price. So for example, this is 567. If I put 560, what is, okay, and in this case, I should put a sell, correct? Sell stop. For sell stop, 560, okay, what is happening is I'm telling the system, if I send this in, I'm telling the system, help me sell these shares if the price drops to 560 and below. So if the price hits 560, okay, it will trigger this order. Trigger means this order will turn alive and say, okay, now it's time to sell. And how will they sell? They will help me try to sell it at market price. So once it hit 560, it will immediately try to help me to sell. But if the price is falling too fast, it may help me sell off at let's say 559 or 558. Okay, it's likely to be below 560. If let's say it's extremely liquid, so the market is not falling a lot, it's bouncing up and down, and it triggers, hits 560. Okay, now 567, 566, 565, 580, it goes up and down. It triggers to 560, and when they try to sell it, you may exactly sell it at 560 or even higher. So remember, market price, okay, it goes back to market price. When it triggers, market price sells at any price. Got it? So this is what the stop order does. In fact, for stop losses, I will recommend or I will suggest putting a sell stop. That's it. Okay. So sell stop means once you hit that price, get out at any price. I'll just get out. Okay. So you can see, this is the example. If you own a stock that's currently at $100, you want to sell it if it falls to 95. You place a sell stop at 95, and if the stock market reaches 95, the stop order becomes a market order and is executed. It becomes a market order and try to sell away the stock at any price they can get. Okay, because sometimes it's falling really fast. You do not want to bargain. So this is a sell stop order. Now, before I go to the next order, I want to show something. Okay, because for example, you can immediately put 2 orders together as a combination. So example, if you want to buy SPY right now. So I want to buy SPY and now it's 586.20. I think this will be useful for beginners. For example, you say that I want to put a limit order. Remember, limit order is I want to pay for this stock, but maximum I'm willing to pay is this price. Do not buy anything higher than this price. In fact, I want to bargain. Now it's 568.2. Let me try to bargain 20 cents. I want to buy it at 568. Okay, so you can see it's a limit order. So the next thing I may want to do is I may immediately attach a stop order, a stop loss. Now, a stop order means, again, if the price drops, okay, to a particular level, okay, so this is 568. If it hits 568, it will help me to buy. But in case after it hits 568, the price continues to drop to, let's say, 560. Wow, okay, I want this particular brokerage to help me sell it off. So I can buy it at 568. Immediately, I can sell it all at 560 when it goes down. Okay, this is called a stop order. You can enforce this. Okay, enforce this. So something I want to share right now is also the time. The time. So you can see the time. There's day, there's good to cancel, there's overnight. I'm just going to talk about day and good to cancel. Now, day means I'm going to put this order in to bargain for me at 568. And let's say within today, okay, today means when the market opens and after that it closed, 1 day is gone, this order will disappear. So if let's say it does not hit 568, okay, it is at 568.2, 568.3, hovers around, it didn't manage to help me buy at 568, this order will disappear. So it will not try to help me to buy the next day. So what happens is I have to come in and then key in the order again. However, if I put good till cancel, if today they are not able to help me get it at 568, tomorrow they will try again. The next day they will try again until two things happen. Until they help me get to buy the stock at 568, or I come in and cancel. So it's good till cancel. Good till I come in and cancel the order. Otherwise, when they help me execute, then the order is fulfilled. Got it? And when they fulfill one time, this order means it's done. It will not like multiple times help me to buy 568. Okay, it will not do that. Okay, so it's only 100 stocks, 568, good to cancel. So once I actually do that, similarly for stop loss, so if I manage to buy at 568, okay, great. I want to ride it as high as possible. Okay, and I'm concerned that if one day, due to election, due to anything, the stock price drop, I may put a stop loss at 560. And same thing, time in force, I can put good till cancel. Okay, good to cancel, same thing. Meaning to say, if I manage to buy at 568, this stop loss, this stop order, to sell it at 560, if the price drop any point in time from now until the time I buy, until any time it drops to 560, it will help me sell it off until I come in and cancel this order. Okay, I can adjust it to 565 later or 570 later. Okay, but no problem. This is the place where I put a stop loss, and I'm very, very assured anything that will happen to me for this trade, maximum I'll lose about $800. Okay, if they manage to help me to sell at 560. So which is typically usually done. Okay, unless the stock market really crash very quickly and gaps down. So this is what I mean by sell, stop, okay, or stop, sell. Okay, so you can see when do you use it? You use it to limit your loss, or sometimes you may want to protect your gain. So how do you protect your gain? Like I mentioned just now, if the stock price has gone up a lot from 400 plus to 500 plus, and I say that I do not want it to actually drop and lose all my profits. So I put a sell order and I put a sell stop order. Now it's 568. Okay, if it drops to 560, I want to get out of this trade. So this is called a sell order stop. Okay, so it's a stop order, there's a sell. Okay, so this is a sell order typically used to get out of the trade that you're in, to limit your loss or to protect your gains once the price is ahead. So now the next particular order, it's also very powerful and very important, and it's also a stop order, but this is a stop buy order. So now let me explain to you the function. The description is exactly the same. This particular order will only become a market order when the price is being hit. So you can see there's sell stop and there's sell buy. And typically, when do you use a sell stop or sell buy? It's usually a little bit counterintuitive to people, but let me describe to you, let's say using a SPY. Let me go for SPY. Okay, so now, initially, the previous stop order that we talk about is sell stop. When we say sell stop, whatever price the market is at right now is 568, correct? When you talk about a sell stop, typically when you talk about selling, you want to sell as high as possible. So a stop order works the opposite way. You want to sell when the price drops. Usually you want to sell, okay, so you want to sell when the price drops. Okay, just now we have mentioned is to protect your losses. So if the price drop, it triggers the sell stop order, and then it will start to sell for you. Now, if you talk about a buy stop order, when do we use a buy stop order? A buy stop order is triggered when the price is higher than current price. So the price now is 568, and I can put here, let's say 600. I'll say that help me buy SPY when it hits 600. You can see right here. Now, why do you do that? Typically, we do that for a breakout strategy. So a breakout strategy means, okay, if you have been into like learning about technical analysis, you know some of the strategies. This is one example. So example, let's say I see that SPY has been ranging for a while. Okay, let's say this particular portion has been ranging for a while, and this is what I can see. So I see that it's ranging for a while, and I want to enter SPY if the price breaks above this particular level. Okay, in this case, I'm going back in time, is 264. So now it's bouncing, and breakout strategy believes that if it breaks out of this portion, I will buy and it will ride all the way up. So you can see right here, if I set a buy stop order, the market will be triggered, the order will be triggered and help me buy it at any price, at market price if it breaks. So you can see right here, it broke. Okay, how do I see it breaks? The price, boom, hits above 264. Okay, and it breaks. And when it breaks, okay, help me buy, and you will ride all the way up. Okay, it may retrace, but it goes all the way up. So as it goes all the way up, I can put a stop order in case it comes down. It helps me get out of the trade. Okay, I do hope that this is helping you so far. Let me give you an example on IBKR. Okay, so right now, the IBKR example is here. Now the current stock price is 568.35. I can put you can see, buy order, sell order. Now it's a buy stop order. A buy stop order, as I put here, a buy stop. Okay, let me show you this. Now it's 568.35. If I put, let's say, 565, okay? If I put a 565, it doesn't make sense, okay? Because what it means is I'm telling the particular a system, okay, if it hits this price, help me to buy. But it's already at this price and below, okay? So when you say now it's 568, it has already hit this price in terms of the buying side. So when you do a buy stop order, it should be higher than current price. So 568, you should put, let's say, 569, okay, or 570, the higher than current market price. So when the market price goes up and triggers, hit the price, okay, hit the price that we want, which is 570, it will help us execute a buy order at market price. So example, the stock price that we want to buy is at currently 47, but I only want to buy when it crosses $50. Okay, again, it is a breakout strategy. So I place a buy stop at 50, and once the price is being triggered, it hits 50, okay, we will execute it. When we say we, the brokerage will execute it. So that's where we want to buy on the breakout. Okay, so this is a slightly, I would say, advanced strategy, especially if you're very new. You may not be using this particular order, but it's good for you to know. Okay, now the next order, we've been talking about 5 already. The sixth one is called a stop limit. So let me explain to you. Now you can see we have been talking about stop. Now there's another additional condition to the brokerage, a stop limit. So it's similar to the stop order, but when the stop price is triggered, example, we say we want to buy when it hits 50. We can say that when it hits 50, help me execute this order. This is called a stop order. When it hits this price, help me execute. At the same time, limit the price. So I do not want you to buy at any price. When it hits a particular price, help me execute the order, but I only want it at a certain price. So let me give you an example here. Okay, so if I put a stop limit, going back to, let's say, just now we talk about buy stop. So when I talk about buy stop, same thing. SPY, go back here. We'll see that right now, the price is 568. So we only want to buy it, example, if it goes above 600. Okay, this is just an example. Let me just do this. And this is a buy stop order. Buy stop at 600. Well, it's actually called a stop order, but we know that in this case, we are choosing a buy. So it's a buy stop order at 600. Now, if I put a buy stop, you can see buy, stop limit. Okay, the stop price means the trigger price is 600. You can see that when I put a stop limit, they give me another function, another input to put my limit price. Now, this may be the case. So now I would say that the limit price is, if you remember limit price, it is the maximum price I'm willing to pay when I'm buying a stock. So I do not want to pay anything higher than the price if I'm buying a stock. So let's say the stop price is 600. The limit price can be, example, 600 as well. So what if I put 600 and 600, what I'm telling the brokerage, the system is this. If it hits $600, help me to buy. But I do not want to pay anything more than 600. Okay? Limit 600. So this is called a buy stop limit. A stop limit. Okay? Limit 600. Do not want to pay more than 600. Then you'll be asking me, Sean, in the case, how is it possible that we even get into this trade? Now it's possible because you must understand that stock prices, it goes up, it comes down. And usually within a day, it spikes up and down, correct? So it may trigger 600, it may even drop below 600, and in the end, you may even buy it as 590 or 595. It is possible, okay? Maybe not 595, but you get the idea. It was strike up and down, and you believe that, well, stock market is not going to fly up so fast, so immediate. I want to actually bargain it. If it hits 600, I want to buy it at 600. Now, you can even put, example, you believe that if it hits 600, it will drop back to, let's say, 599. Okay. If it hits 600, I want to buy it, but I only want to buy it at 599. So you get what I'm trying to say? So you can actually have all these variations once you understand the functions of all these order types. So order types are very, very important. Again, this is a slightly, I would say, advanced order type. Okay, especially if you're very new. So I can put here at 599. Okay, it's very, very narrow, but essentially what I'm telling the brokerage is this. If it triggers at 600, okay, if it hits 600, there's a stop, okay? The stop is 600. It hits 600, help me trigger this order, but I only want to buy it at 599. The limit is 599. So limit is always talking about the maximum I'm willing to pay. Okay, it is possible. So this is what we call stop limit. Now, similarly, if let's say we are talking about a stop loss. No, stop loss, meaning you say sell stop, okay? Sell stop. So right now we have the shares and we are concerned that the price may drop. So what if the price drop? I may lose all my profits, I may lose money. So one thing we can do is we can put a stop limit as well. So right now it's 568. We can put, let's say, 560. Let me put 560. Okay. So if it drops below 560, help me trigger a sell order. Okay. How do I trigger? By putting a sell stop. Stop at 560. Let me put this red. Okay. So when we put a sell stop limit, okay, example, let me go to IBKR. Let's say I already have this stock. I'm going to put a sell order, and this sell order, it's a stop limit. Same thing, they will ask me what's the stop price. Stop price means what's the trigger price, the price where you want this order to be executed. It is 560, right? I'm going to put 560. Okay, and the limit price, I will also want them to, let's say, tell me, okay, or rather I want to tell them, I say, okay, when it hits 560, help me to sell, but do not help me sell unless, okay, unless I can get, let's say, slightly lesser, maybe 559. Okay. Minimally help me get back 559. Okay, minimally help me get back 559. So you'll not see selling off at 558, 557. It is not possible for the system to do that because you limit the system. Okay. So let me put 559. 559. Again, it's very narrow. But you get the point. The point is the stop price that you set in is the price that is being triggered. The limit is the minimum I should get for this order to be executed. So when you're selling, the minimum you want to get is 559. Okay. Just now we talk about buying is the maximum you want to pay. So actually, the limit actually protects you in that sense. Now, however, that being said, understanding the function, as an investor myself for many years, I would like to suggest that when you put a stop loss, you do not put a stop limit. The reason is this, because sometimes the stock market goes down really fast and I want to get out at any price. I'm not going to limit the system and say, hey, help me at least get back this price. Because if it's going down so fast, I'm not going to bargain. I want to get my capital out as soon as possible. So I do not put a stop limit. Later, I'll come to a summary again so that you know typically what we do. Okay. But at least you understand what is a stop limit. You want to execute a stop order and you want to ensure the price is still within what you want to bargain. So this is called a stop limit. Again, stop is the trigger price. Limit is the price you want to get minimally or maximally. Okay, pay or get. Okay, so again, if this is very new to you, you can actually rewatch the video a few times, test it out using a demo account, and it becomes a lot clearer. So we have talked about 6 particular order types. Let's talk about the last 4. Now, the last 4, okay, the next one is called trail. Now, trail gives me a huge thrill. Okay, why? Because this is one of my favorite order when it comes to taking profit. Okay, so you can see a trail order is a stop order that trails the market by a certain dollar or percentage. Again, this is slightly advanced, but I highly recommend, if you're my tribe member, if you see my trades, I like to use trail a lot. Okay, why is that so? Now, because it helps me maximize my profit. You'll see why in a while. So you can see that the stop price is adjusted as the price moves in your favor. Okay, so what does it mean? Okay, so there's an example here. But the example that I used was Baba. Now, Baba, okay, well, this is trailing because we make 100% in a short period in time. What happened was we entered Baba, I think it was around, let me just check. When did we enter Baba? Okay, it was, I think, sometime back. Oh yeah, I was putting it in my Telegram group. So we enter it on the 6th of September, we exit on 30th September, which is about 3 weeks, okay? Okay, 6th of September, you can see right here. Let me just... 6 September. Oops. It's too narrow. Okay, this is August. And let me change it to day. Right. So you can see right here on the 6th of September. Okay, here. We enter here. Okay. And as I see Baba's price increases, I did a trailing order. Okay, so what's a trailing order? Let me show you this. This will be a little bit easier if I use a current stock that I have. Okay, example SPY. So you can see quite a number of stocks. Okay, let's say SPY. We've been talking about SPY. You can see that I've made a profit of about 1,000 plus, about 1% plus. We have Amazon. We have quite a number of them. Oh, okay, maybe this is a good one. So MCHI. This is a China ETF. It's gone up by quite a fair bit. So now let me show you what I would like to do. Okay, so here I will click on this. Okay, let me go back a while. I'll click on these three dots. I will put a close. Okay, close. I bought this, so now I'll be selling it. So when I click on close, they will automatically bring me to a sell order. Now you can see this sell order. The type of order, I will choose trail. Now, when I choose trail, what does it mean? You can see that they also have a stop price. Okay, the stop price is the price that I will trigger it and sell it off at market price. I can leave this blank if I want. But what I'm going to put is this. I'm going to put example here, a percentage, and I'm going to put, let's say, you can see that I've already made about 100%. So I'm pretty happy. The price is going up. But what I want to do is, if let's say it's going higher and higher up and it drops by 10%, I'm going to get out of it. Okay, so if I'm going to put 10 and you see 10%, and I'm going to put good to cancel, what does this actually mean? Okay, just to explain it using a chart. Okay, right now, you can see that this is the highest price, or in fact, this is the market price right now. Let me show you this. This is a very important order type, which I would love all of you to like understand and see whether you want to use it, because I find it very, very effective. So right here, the current price is 52.98. You can see the current price. It closes at 52.98. Okay, 52.98. So now this is the current price. So I can actually set a 10% trail order. A 10% trail order means that anytime the price drops by 10%, I will get out of this trade. So let me do a quick calculation. 52.98 multiplied by 90%. Okay. So what this means is, if I put a trail order of 10%, they will help me put a stop order at 47.68. 47.68. Did I get it right? 47.68. You can see it's quite a big gap. Okay. But meaning to say, I've already made money, goes up. At any point in time, it drops from the highest point. Okay, based on current price, it drops by 10%. It drops by 10%. Okay, it will help me get out. So I will still capture most of my gain. I'm just going to get out at the lower portion of the 10%, from 10% from the top. Okay. Now, what happens? What happens if, let's say, the price continues to go up? If the price continues to go up, this order will adjust accordingly. So as the price goes up, let's say to 64. Okay, let's say it goes up all the way to 64. Now, my stop my stop order, because it's a trailing, it will trail. It will actually follow the price. As it goes higher and higher, this stop order will also go higher and higher. So same thing, it will still measure 10% from the top and then adjust the stop accordingly. It will be automated. Okay. So right now, instead of 47, from if the price goes to 64, multiply by minus the 10%, it will be 57.6. Okay. It will be somewhere here, 57.6. So you can see as the price goes up, my stop loss actually catches the price and it trails behind. So you can see this is how we maximize profit. Of course, you can put a 5% and things like that. But imagine if it's too close, you say, okay, how about if I just do 1%? But if it's 1%, that particular day, if it just goes up and then strike the price a little bit, you'll actually exit. So I like to put a buffer, maybe 5 to 10%. Okay, so this is what a trailing stop loss is. So a lot of people have been asking, wow, what is this trailing stop loss? Why do I like to use it so much? That's the reason. Okay, I do hope that this is useful for you. This is a trailing stop. Okay, which is one of the order that one of my most preferred order in terms of capturing profit. Okay, now the next one, we can also put a trail limit. Now you realize that in almost any order, we can put a particular order and we put a limit, right? Okay, when we put a particular order like trail or we put stop, it means that once it hits that price, example, in this case, once it hits 10% draw, help me get out at market price, any price, help me get out of it. But if I put a limit, means once it hits a 10% drop, helps me trigger the order. But minimally, I want to still get it out at a certain price. Got it? So let me just show you this. So for example, instead of trail, I put a trail limit. Okay. So a trail limit is a little bit more complicated. So let's say I put I'm going to use an amount easier. So currently, you can see I put a particular a limit price. So minimally, I want to actually sell these stocks, okay, by if it drops by 10%, but minimally I want to get it at 11.30. Okay, Ken? So this is what we can do to set as a limit price. There's also a limit offset and also stop price, but I'm not going to actually go into all this right now because it's really a lot more advanced and it's unlikely that most of us use it at the moment as a beginner's guide. Okay, so but I just want you to understand there's also a trail limit. Okay, the last two types of orders, market on close and also limit on close. Okay, I'm going to go through these two orders very, very quickly. It's pretty simple. And this one is using certain strategy. And again, as a beginner, it is unlikely we will use it right now unless you have learned strategy on opening a particular order or going into a particular order when the market close. So let me just show this. So for example, you say that I want to buy SPY. And usually market on close for my strategies is usually used on options instead of stocks. But let's go into this, the idea behind market on close. So let's say I want to buy SPY. Okay, I can put, you can see, market on close. When I talk about market on close, they don't allow me to input any price. Meaning to say, by the end of the day, around 4 a.m. or 4 p.m. New York time, when the market close, help me buy SPY regardless of the price. So it's called market on close. Does it make sense? So this one typically is just a day order because, well, market on close today. You will not buy market on close every single day. So market, when it close on that day, the last minute, the last second, help me enter at that particular price. This is for certain strategy. Now, if I put market or limit on close, well, when the market closed that day, help me buy SPY when it closes, but maximum I'm willing to pay is, let's say, example, $600. I do not want to pay anything above 600. That's my limit. Okay, that's why it's called a limit. So this is a limit on close. So these are the different strategies again, and these are the different order types. And let me just give you guys a summary. For suggestion, okay, for beginners, I'm going to focus on using limit order to enter, like a buy limit. I want to buy SPY, okay, but I want to limit it to, let's say, 568. Learn to bargain a bit. It's okay. But do not bargain too far off. Now it's 568. Don't bargain at $200. Okay. So this is a limit buy order. And then after that, set a stop loss. After you create a limit order, remember to put a stop loss. So I want to get out of SPY. If I manage to buy it at 560, I want to get out if it hits 550, example. Put a stop loss. So you limit your losses. Okay. So this is what helps you. Then for intermediate and advanced, you can use other strategies and other order types based on what kind of trading plans you have. So again, I do hope that this has been useful for you guys. I'll be going through more 101 beginner's guide because I realize it's very important Do let me know in the comments if this is useful. And if you have not subscribed, please help me subscribe, give a like to this video, comments, share this video so that every of us can actually build wealth and give wealth together. But remember, the last thing I want to end off the video, as per almost all my video, is this. When you invest, position size is everything. So even with all these orders in place, make sure that whatever amount you have in your portfolio, take a certain portion of it, which you budget to that trade. You do not put your whole entire portfolio in a trade. So size is nothing, sizing is everything. Learn about position size. In my next few videos, I'll be covering that as well. And I'll see you in the next few videos. Invest safe and remember to position size. I'll see you around.